What is the stock market? Danny from Wicked Cool Finance here. Most mornings when I start my day, I typically have the television on in the background. I'm a financial guy. I grew up in the financial world. After school, I started as a stockbroker, as a financial advisor. So I'm a financial guy, and I enjoy watching the financial channels. I watch CNBC. Sometimes I watch Bloomberg and others. But it's interesting when you're watching the financial channels. The commentators on TV talk about the stock market as though it's a living, breathing person. Just last week, I heard a commentator say, the market is telling us that interest rates are about to fall. Heard another commentator say, the market is telling us that the market's about to crash. They talk about it like it's a person. I wonder if the stock market could come over for dinner next week. That'd be pretty cool. Well, the stock market is not a living, breathing person at all. When the commentators on TV refer to the stock market, what they're typically referring to is a thing called the Dow Jones Industrial Average. Let's talk about the Dow. The Dow is only 30 stocks, believe it or not. How did it come to be? Well, many years ago, in 1896, there were two guys, Charles Dow and Edward Jones. And they were trying to figure out a way to create something that would help the general public understand the stock market and how the stock market related to the economy. And they came up with this idea of the Dow Jones Industrial Average. Back then, the average only had 12 stocks in it from the 12 sectors of the economy. There's actually an extra sector of the economy that is not covered by the Dow, and that's the transportation sector. That's a subject, the transportation sector is a subject for another video. Back then, the Dow just had 12 stocks in it from the 12 sectors of the economy. Today, it's evolved. And the Dow has, now the Dow only covers 12 sectors, but it covers 30 stocks. They have expanded it a bit. Well, how's the Dow work? The Dow actually is a price-weighted average. What's that mean? Well, with a price-weighted average, you take the value of the stock multiplied by its weight, you take that number and divide it by the number of stocks, in this case, 30. Let's do a little bit of a deeper dive so you can understand more specifically in real life how that works. Well, the smallest company in the Dow is an insurance company called Travelers. In total, Travelers today is worth about $55 billion, okay? Where'd the $55 billion come from? Again, a subject for another video. But Travelers' stock price is $245 per share, okay? The largest company in the Dow is Apple. I think Apple's the largest company in the world, actually. Apple's worth about $2.97 trillion. But Apple's stock price is $198 per share. So Apple's stock price, $198, Travelers being the smaller company, but their stock price is $245. Well, believe it or not, because Travelers' stock price is higher than Apple's, Traveler actually has more of an impact on the Dow Jones Industrial Average on a day in and day out basis than Apple does. Let's go a little bit further. Let's look at the largest stock price. Not the largest company, but the largest stock price in the Dow. That is United Healthcare. United Healthcare stock, as of the filming of this video, as of the date of the filming of this video, United Healthcare stock was about $600 per share. The company itself, though, is worth $548 billion. Stock price worth $600 per share. Compare that to Coca-Cola. Coca-Cola's in the Dow. Coca-Cola is, as a company, worth about $307 billion. But Coca-Cola's stock price is only $71 per share. Okay? Well, Coke's stock price being at 71, that's about 9 times less, or you could say that United Healthcare Group's stock price being at 600 is 9 times higher than Coca-Cola's. Interesting. So when United Healthcare moves, it has a dramatic impact on the Dow Jones Industrial Average on a day in and day out basis. Let's talk about the market. You know, the market for the last couple of years has been incredibly volatile, up and down, all over the place. And in fact, today, the Dow Jones Industrial Average sits at about $40,000 to $41,000. Okay, what's that mean, and how does that impact things on a daily basis? Well, let's go back in time, and let's look at the market back in 1987. In 1987, we had a crazy day. October the 19th of 1987, we had a massive market crash. Back then, the Dow Jones Industrial Average was about 2,400. Isn't that interesting? In 87, the Dow was 2,400. Today, in 2025, the Dow sits at about 40 to 41,000. So it's definitely grown. Well, on that fateful day, on October the 19th of 1987, the market fell 22%. Well, it was starting from a point of only 2,400. So when we say the market fell 22%, that means it fell 508 points down from 2,400. That was a big deal, and I'll tell you, I remember the day, it really was a big deal. Well, just last week, the market fell about 1,000 points. And the commentators on the television were going, you'd have thought it was the end of the world. They're going, oh my gosh, the market's falling 1,000 points. But let's put that into context. With the market being at 40,000 or 41,000, when it fell 1,000 points, if you do the math, that's only 2.5%. Well, nobody really likes it when the stock market falls, but it only fell 2.5%, 1,000 points. And in fact, within 2 days after that, it had made it back. So as you're watching the television and looking at the commentators on TV, take it with a grain of salt. When they talk about the stock market, they're talking about the Dow. And keep in mind, don't look at the number, the movement of the stock market in a number basis. Look at the percentage movement, and you can see that what they think or what they act like is a really big deal may not be. Like and subscribe. Thank you very much.